Welcome back to Web3 Projects Reviewer. Today, um, we're diving into the Pi Network, a project that's been creating quite a buzz. We're just a few days away from some big events for Pi, happening on February 20th. And you might be feeling the FOMO. But before you jump in, we want to help you understand if Pi Network is a reliable investment, or just another flash in the pan.
What's interesting about Pi is how it's managed to attract millions of users. With its promise of easy mobile mining, yet concrete details about its technology and how it actually works are hard to come by.
Okay, so let's start with the basics. Pi Network launched back in 2019 and quickly gained traction by claiming you could mine their cryptocurrency right from your phone. That's pretty enticing when you think about how much energy and expensive equipment is needed to mine something like Bitcoin.
That's right. Pi cleverly tapped into that desire for easy access to cryptocurrency. But they've been promising a mainnet launch for ages, which is essentially when a cryptocurrency becomes fully operational and independent. It's been delayed repeatedly, and this raises some red flags.
So, it's been almost 6 years and they still haven't fully launched. And what's the deal with this enclosed mainnet thing I keep hearing about?
Good question. Pi has been operating on what they call an enclosed mainnet, which means the network is still controlled by the Pi core team. Users can't freely trade their PiCoins on external exchanges yet. They claim this is for testing and development, but it also means they retain a lot of control, which goes against the whole idea of decentralization that cryptocurrency is supposed to be about.
So, it's like a beta version that's been going on for years. That doesn't sound very reassuring,
Okay.
especially with all the hype surrounding this February 20th launch.
Exactly. And speaking of February 20th, there are a couple of big events scheduled that have everyone talking. Firstly, the OKX cryptocurrency exchange is listing Pi, allowing deposits from February 12th and spot trading from February 20th.
Wait, so people will be able to buy and sell Pi on a major exchange before the network is even fully open? That sounds a little backwards, doesn't it?
It does seem odd, doesn't it? And this brings us to the second big event. Pi Network is finally planning to launch its open network on February 20th. This is supposed to be the transition from the enclosed mainnet to a truly decentralized network.
Okay. But we've heard promises about a mainnet launch before. What makes this time different? And why should people be cautious?
Well, the fact that OKX is listing Pi before the official open network launch is a definite cause for concern. It raises questions about OKX's due diligence and whether they're putting profits ahead of user safety. And for potential investors, this rush to list Pi before it's even fully functional adds another layer of uncertainty and risk.
So it almost feels like they're rushing this launch to capitalize on the hype surrounding the OKX listing. Is that a common tactic in the crypto world?
Unfortunately, yes. We've seen this pattern before with other projects that prioritize hype over substance. They generate buzz to attract new users and investors, often with big promises and flashy marketing, but then fail to deliver on their claims.
So, if someone's thinking about investing in Pi, what should they be aware of, especially in light of this February 20th launch?
First and foremost, be wary of any project that lacks transparency. A solid white paper, a clear business model, and a credible team with a proven track record are essential for any trustworthy crypto project. Pi, unfortunately, falls short in all of these areas.
That's a great point. A white paper is like a blueprint that explains the technology and vision behind a cryptocurrency. And from what I understand, Pi Network hasn't released a detailed one, which makes it really hard to assess what they're actually building.
You're exactly right. And when it comes to the team, while Pi's founders have impressive academic credentials from Stanford, their experience in building and scaling a complex technological project like a cryptocurrency is unclear.
So, while the idea of mining crypto on your phone might sound appealing, the lack of transparency surrounding Pi Network should raise some serious red flags for anyone thinking of investing.
Absolutely. And with this OKX listing happening before the open network launch, it creates a situation where people might be tempted to buy Pi based purely on speculation and hype, rather than on a fundamental understanding of its value.
So, before you get swept up in the Pi frenzy, do your own research, ask tough questions, and remember that a reliable crypto project should have a solid foundation, not just a catchy name and a bunch of promises.
Let's delve a bit deeper into some of the other concerns surrounding Pi Network.
One thing that really caught my attention was the sheer number of Pi coins that are out there. It's significantly larger than established cryptocurrencies like Bitcoin. We're talking about hundreds of trillions of Pi. Compared to Bitcoin's 21 million, That seems like a recipe for inflation, doesn't it?
It certainly raises concerns about Pi's potential value long term. With
Wow.
such a massive supply, it's hard to imagine Pi ever reaching the same price levels as Bitcoin, or even other smaller cryptocurrencies with more limited supplies. It's basic economics. Supply and demand.
So, even if Pi does become widely adopted, the sheer number of coins in circulation could keep its price really low.
Exactly. And this is where Pi's token distribution becomes even more concerning. According to a video analyzing Pi's blockchain data, only 7 individuals hold over 1 million Pi each. They're being called the 7 Dons, likely founders and early investors, and their massive holdings give them significant control over the market.
Hold on, so just 7 people control a huge chunk of all the Pi out there. What does that mean for the average user who's been mining on their phone?
It means that a small group of insiders have the potential to manipulate the market and benefit themselves at the expense of everyday users. Imagine those 7 Dons deciding to sell a portion of their holdings. The influx of Pi into the market could cause the price to plummet, leaving everyone else with losses.
You're saying there's a real risk that the average Pi user might end up holding worthless coins while the founders and early investors get rich. That sounds pretty alarming.
It's a valid concern, and it highlights the importance of understanding a project's token distribution before investing. In Pi's case, the concentration of power in the hands of a few raises serious questions about fairness and decentralization.
It's starting to sound like Pi is less about empowering individuals through cryptocurrency and more about enriching a select few.
That's certainly a possibility, and it's why it's crucial to look beyond the hype and critically evaluate the structure of any project you're considering investing in.
You know, when we were prepping for this deep dive, I came across something really strange. There are reports of a thriving black market for Pi in places like Pakistan. People are buying and selling Pi coins at discounted prices. Even though it's not officially tradable yet, why would anyone do that?
It's a fascinating phenomenon, and it really underscores the speculative nature of the crypto market. Despite Pi's official stance that their coin has no value until the open network launch, there's clearly a demand, albeit driven by speculation and perhaps desperation.
So, it's almost like people are gambling on Pi's future success, hoping they can buy low now and sell high later.
Exactly. But it's a risky gamble, especially given Pi's lack of transparency and the potential for manipulation by those 7 Dons we talked about.
It all boils down to trust, right?
Yeah.
And right now, there are just too many unanswered questions and red flags surrounding Pi Network. If a project can't provide a solid white paper, a clear business model, and a transparent team, it's hard to trust that they have the user's best interests at heart.
You're absolutely right. And with these upcoming events on February 20th, the pressure is on for Pi Network to deliver on their promises. The launch of their open network and the OKX listing will be under intense scrutiny.
So, what should our listeners be watching for as these events unfold? What would indicate that Pi is moving in a more trustworthy direction?
Firstly, they need to release a comprehensive and technically sound white paper.
Hmm.
This document should clearly explain their technology, their tokenomics, their plan for decentralization, and how they intend to address the concerns that have been raised.
And beyond the white paper, what else should we be looking for?
More transparency about their team and their development process. Who are the key players behind Pi Network? What is their experience? How are decisions being made?
It sounds like Pi Network has a lot to prove if they want to be taken seriously in the crypto world.
They do. And it's important to remember that trust is hard-earned and easily lost, especially in an industry as volatile and prone to scams as cryptocurrency.
This black market activity is interesting, but it's not the only red flag that's emerged around Pi Network.
What else have you uncovered?
Well, there have been reports of users having their KYC Pi coins blocked for seemingly no reason. And remember, KYC stands for Know Your Customer, a process used to verify the identity of users. It often involves providing sensitive information like passports and IDs.
That's a significant concern if users are being blocked from accessing their Pi coins, especially after going through the KYC process. It raises serious questions about the project's control over user funds and their commitment to transparency.
Exactly. It creates a sense of uncertainty and distrust. Like, what's the point of mining these coins if you might not even be able to access or use them when the network launches?
It also raises concerns about data privacy. Pi has collected a massive amount of personal data through its KYC process, including passport details, government IDs, and even facial recognition data. But their data privacy policies are vague at best.
So we're handing over all this sensitive information, but we have no real assurance about how it's being used or protected.
That's right. And with Pi networks still being centrally controlled, there's no guarantee that your data won't be sold to third parties or used for purposes you haven't consented to.
For a project that claims to be about democratizing access to cryptocurrency, it seems like they're operating in a very opaque and centralized way.
That's a key takeaway from all of this. True decentralization requires transparency, open source code, and community involvement. Pi network, so far, has shown a reluctance to embrace these principles.
So what does all this mean for our listeners who might be wondering if Pi is a legitimate investment opportunity, especially with these big events happening on February 20th?
It means proceed with extreme caution. Any project that lacks transparency, a solid white paper, a clear business model, and a proven team should be approached with a healthy dose of skepticism.
The allure of easy mobile mining and the hype surrounding this upcoming launch might be tempting. But don't let FOMO cloud your judgment.
Remember, informed decisions are your best defense against scams and risky investments. Do your own research, ask tough questions, and don't be afraid to walk away from a project that doesn't feel right.
There are plenty of legitimate Web3 projects out there with solid foundations, transparent teams, and real-world utility. Focus your energy on finding those projects instead of chasing hype and empty promises.
And remember, the world of Web3 is constantly evolving. Stay informed, stay critical, and stay connected with communities like ours that are dedicated to sharing knowledge and insights.
We hope this deep dive into Pi Network has provided you with the information you need to navigate these uncertain waters.
The events of February 20th will be a defining moment for Pi. Let's see if they can finally address the concerns that have been raised and demonstrate their commitment to transparency and decentralization.
We'll continue to follow Pi Network's development and keep you updated on any significant changes. But until then, stay vigilant and keep on supporting us.